Johann, I don't know how much of our conversation about central banks you heard as well, but can I ask you a broad question before we dig into your numbers? Jeff insinuated or said or pondered upon the question that central banks are stumbling around in the dark. Would you have a degree of sympathy for that view?
Yeah, good morning. Thank you for having me. It was very interesting to listen, and the messages I got from him is let's say twofold. On the one hand, I acknowledge and agree with him that many of the messages they give and the actions they set in the past, they are very supportive to the economy and also to the sentiment. On the other hand, there is now so much liquidity in the markets that I also understand that people more and more ask themselves, is this the right means to add more and more, or do we need different views? And I think different actions as well. And here I think the ECB had been also very clear when calling other institutions like the governments to support the economy as well. But overall, I think it worked, and we are very positive for this year and the next year.
And yet, sir, because of the actions of central banks in that support mechanism, your net interest income, your net interest margins have been sived from where they would have been only a couple of years ago as well, and remain under pressure as well. And I note the valuations in the markets for the European banks remain at a significant discount to many of their international peers, with your own price to book on the next 12 months trading somewhere in the region of 0.44 as well. Will you ever be able to get a valuation revamp to the upside and improve your net interest margins while we still sit at these historically low levels from central banks?
Yeah, here I fully agree with you. I mean, it's the banks, the European banks, more than any other region, I think, which suffer, which pay the bill for that. It's the depositors to some extent, and the other part is paid by the banks. And you see it in the numbers, and you see it even more if you look just at the Q4. How big the drop in net interest income, if we compare it to the net interest income 1 year ago, it's a 13% drop. It's difficult to come back within a year. So this I have to admit. Of course, what we expect is some recovery, more economic activities, more loan growth. So it should rather come by the loan growth than this year than by any rate development. But this will change next year in some of the countries where we are active in. I think we have seen in most of the countries the low of the central bank rates, and they will increase maybe in the other country already by the end of this year, but for sure next year.